Hi everyone, welcome to our group project on Costco case analysis. I'm Mook. I will be the first one to talk to you guys in this presentation. But first thing first, let me the rest of my teammates introduce themselves.
Hi, I'm Kate.
Hello, I'm Kay.
Hi, I'm Amy.
Hi, I'm Nick.
Fantastic. Let's get started.
Let me start with company background, which I'm pretty sure that everyone might have known Costco as an American multinational wholesale brand, which is ranked in the third largest global retailer. Costco has been uniquely operated as membership-only warehouse to position itself in the market, which is successfully attractive to its target market, and there are about 785 warehouses worldwide. So Costco is practically earning the net sales that's including the membership fees. How about the product and services? Costco offers products and services in the accessible and reasonable prices, such as grocery, gas stations, pharmacies, or food court, together with its house brand as Kirkland signature. In the global retail industry, it definitely has the strong and unavoidable competition. And yes, Costco also had its strong competitors as Walmart, Sam's Club, Amazon, and etc. So Costco still need to develop and improve its brand to compete other competitors. And now I will pass to Kay and Kate to tell us about the situation analysis.
Thanks, Mook. Here are identified the most outstanding strengths of Costco. The company generated 144 billion in sales, becoming world's third largest global retailer in 2019. Costco has also a basic and modest model which allows minimize its operating cost. Costco has hardcore loyal customers thanks to its membership business model. The corporation has also a strong brand equity, offering high-quality products and service at low prices. Likewise, the company has a wide supplier base and in different countries, allowing it to minimize from the impact of issues such as the USA-China trade war. Finally, Kirkland's signature brand, its private brand, generated 39 billion in sales in 2018. On the other hand, we can specify the following weaknesses for the warehouse. Costco stores have 3,700 SKUs, which restricts customer choices. Besides, there is an entry of millennial generation to the market. At present, they represent 24% of global population and they will replace baby boomers. Furthermore, Costco is highly dependent of the financial performance of its USA and Canadian operation. Its international business only provided 12.8% of net sales last year. Costco has also low technological capabilities compared to its competitors. E-commerce accounts only for 4% on Costco businesses. Finally, if Costco fails to maintain or increase the penetration of members, loyalty, and maintain high renewal rates, it could negatively affect its profitability and existence. Now Kay is going to present the external analysis.
Thanks, Kate, for your brief view on the internal factors. Coming to the external factors, starting with the opportunities. Costco is expanding its presence in the world's most populous country with the plans of having up to 3 stores by the end of 2020. E-commerce contributes hardly 4% to Costco's sales, which is very minimalistic when compared to its rivals. Costco, as per its internationalization strategy, can enter 28 countries from global retail index apart from existing China and Mexico markets to gain more market share. Costco can highlight the fact that they are socially responsible worldwide to increase brand loyalty. Brand positioning by targeting more millennials with products trending with the generation is a viable option. Threats. In this digital age, Costco has not been as aggressive in its e-commerce and multi-channel strategies compared to its direct competitors such as Walmart and Target. Costco's rapid internationalization increases its exposure to negative impacts of fluctuations in forex rates. Continuous product recalls have affected the company, putting the brand image, financial performance, and even the health of its consumers at risk. Over the years, the price war in retail industry has intensified, with multiple retailers promising lowest prices. Uncertainties related to trade war between US and China, inflation, changes in tax rates, tariffs, etc., can negatively affect Costco's growth.
Costco is a solid performer and it has a unique business model that could impact its long-term outlook and earnings. Problem has been detected among the total of 782 warehouses. 543 are located in the North American region. US and Canada constitute 87% and 84% of the net sales and operating income respectively last year. At its most basic, Costco's profitability is extremely concentrated in a single region, which is the North American market. Given the low revenue volume associated with its international operation due to its low brick-mortar and online presence, how can Costco capitalize its market trajectory and continue its expansion successfully, and in turn improve its privileged global retail position?
Okay, let's talk about the alternative solutions for Costco. The first alternative is expansion in China. The reason is China has the largest population globally, about 1.4 billion people, which is a huge market. On the other hand, Chinese supermarket industry is forecasted to grow nearly 6% at revenue during the next 5 years, reach a total of $220 billion. Besides, the concentration level of this scatter are still low. The major players just take a quarter of the industry revenue, and the rent in developed countries are 17% to 19%. Last reason is that China is the only country still get GDP growth in 1990. That means Chinese market is more important than ever.
Thank you, Amy. As highlighted in the SWOT analysis, e-commerce has been one of the biggest opportunities as well as weaknesses of Costco. Prior studies have shown that consumers' purchase activity substantially increases when there is a multi-channel scenario compared to a single-channel strategy. Additionally, due to the COVID-19 pandemic, adoption of online grocery is getting a considerable boost. For instance, in the United States, e-commerce sales will soar 18% to reach more than $709 billion this year. Recent survey by Cortes Research states that 49% of American grocery shoppers are buying more or started buying online. Costco can invest in its multi-channel strategy to reach both the standards and the technological capabilities of its rivals. In this way, Costco would not only create a competitive advantage, but also open the opportunity to penetrate other markets and attract new customers, especially tech-savvy millennials, both local and international. Over to Kate.
Thanks, Kay. The last feasible solution is format development. It is a growth avenue untapped by many retailers, especially as retail internationalization. Costco is one of them. Pursuing growth within mature markets, coupled with increased urbanization and new consumer trends, demands that the retailers complement the traditional store and make a transition from single format approach to the development of new formats. This to adapt to other locations and markets, which will keep all customers and attract new ones. For this reason, Costco should develop a new format that will enable its evolution by allowing opening and capitalizing new markets and opportunities. In this way, Costco will follow the successful example of IKEA, Target, Macy's, JCPenney that have created smaller formats. Now, Mook will continue with the next stage of this case.
Thank you, Kate. My teammates have identified each alternative, so now it's time for evaluation. As you can see on the slide, our team has done the decision grid, which contains 6 criteria and the weight for each of them. We have reasonably evaluated based on the highest weight criteria, which would be the risk, expand customer base, and the market share outlook. As you can see, that the expand multi or omni-channel retailing as a second alternative has the highest rating score at 6.85, comparing to other two with less than 6 rating scores. Costco has many competitors that have greater technology proficiency, potential of financial, and superior market penetration, which count as a risk, and it leads to lose the market share. Consumer expansion is a must because e-commerce accounts only for 4% of Costco business in 2019, while Walmart has taken it as the gratification capabilities. Also, online grocery shopper has been increasing year over year, so it would be a great opportunity for Costco to lift its brand in the same or higher level than the competitors. So Costco should be proceeding with the second alternative as an action plan for implementation. And I will pass the recommendation section to Nick, Amy, and Kay.
The first recommendation we provided for Costco is creating more local content in digital. Within the multi-channel strategy, it is recommended that Costco focuses more in localized and customized content for social media accounts and other digital channels. Costco should ensure that all the information about the company can be accessible and relevant to all audiences across the world. For instance, we pick up the successful case is IKEA. The company runs several Instagram accounts in different languages, and they are localized the content, including stories, image descriptions, and hashtags that will all help the organization to create the personalized connections with its overseas consumers and reach targeted customers faster to gain a competitive advantage.
Even though Costco had entered e-commerce markets earlier than its rivals, they have not managed to adapt and grow with time. So to grow more in the e-commerce sector, Walmart had acquired e-retailers such as Hayneedle for furniture and decor, ShoeBuy for shoes, in order to stay ahead and provide as many options to its customers and with the same ease and experience of the brick-and-mortar stores. Similarly, Target, that owns the on-demand delivery service Shipt, has recently acquired R&D from Deliv to operate same-day delivery service. For the purpose of improving its performance in e-commerce sector, Costco can invest in acquiring technological infrastructure and small companies or startups which have mastered the areas the warehouse is struggling in and reach the technological capabilities that its competitors already have.
Okay, let's talk about the last recommendation for Costco. Online server innovation. Costco should consider the best practice of online business leaders as its own benchmark in order to better promote its online sales. For example, Amazon has successfully applied some marketing strategy, such as subscribe and save and the Dutch button, which offer 10% discounts for regular consumption on daily necessities, such as toothpaste, dog food, and diapers. Those techniques certainly have cultivated customer shopping habits and loyalty for its website and app by reducing the step and time when they are shopping. That's all our presentation. Thank you for watching.